Why does it feel like the harder you work at finding that perfect strategy, the more money you lose? Well, it's called the investor's paradox. Effort does not equal alpha. You might be spending 8 hours a day working hard, looking for that perfect setup, maybe digging deep into single stock fundamentals, and you're still underperforming a simple ETF or index fund. It means your process is broken. Today, we're going to flip the script on how to generate high conviction ideas without the mental burnout. The truth is, the market doesn't care how hard you work. It only gives you alpha when you make the right judgments. And when you're feeling burned out, guess what? Your judgments are tainted. You start taking stupid risks because you feel like, I just should be doing something. And then you look on X or social media and it seems like everyone's a billionaire and they're up 100% year to date, or so they say. To fix this, we're going to go to a secret resource where there are already thousands of ideas and strategies, models that you can pick from. Someone has already developed this. You merely need to scroll through, look at them, decide which one is right for you, and then customize it. The website is called Portfolio 123, and it's just one of the many tools that I use to make my investment decisions. Now, once you're logged in, you're going to want to go up into the search box just at the top here where it says stocks, accounts, and watch list. It doesn't look like anything exciting is going to be in here, but notice when you click inside of it, you have two options. You can look up stocks and ETFs, or you can look up systems and strategies, yours or public ones in research. That's where all the money is. We click on that. It's going to take you to this page. Now, the first thing I'm going to want to do is I'm going to want to cancel out the author. I don't want to look for just my simulations or strategies. The next thing I'm going to want to do is look down to visibility. I'm just going to want to show the public strategies, because I don't want to show all my private strategies as well, because I'm making this video for you. Next, we're going to want to decide the model type. Do I want to look at just live strategies? So these are strategies that are running in real time. That's good if you want to look at just out of sample live returns. If you want to look at a wider range of strategies, you're going to want to click simulated strategy. And there's actually a lot of things you can look at different screens. There's different components like ranking systems and so forth, but we're just going to stick right now to the simulated strategies. Click search. Now we come up with 3,802 options. How do we sort this massive list? Well, you can see that there's various fields here, then columns that we can sort by. Annual retention, max drawdown, Sharpe ratio. But what I want to draw your attention to is that some of these strategies were made a long time ago. For example, this one, it was only run between 2002 and 2007. Now, it might be a great strategy, something that we can use now, but it hasn't ran a test since 2007. Let's just ignore it for now. So let's sort by the update date, or it's going to be the more recent date that the strategy was run up until. So let's go through. Okay, you can see there's some strategies, one here even that I put in. AC Momentum by Walter. It's long only. It ran for the last 10 years, 21% annual returns. That looks interesting with a Sharpe of 0.9. Let's open it up and have a look. Okay, so something doesn't look quite right. Looks like there's some market timing involved with this strategy, and I can see that there's only 5 positions. So already, I'm not really interested in using this strategy, because what you want to look for is robustness. Maybe the strategy works, I don't really know, but you're looking for maybe more than just 5 positions. You want a strategy, maybe it's 20, 30 positions. You can use it in different market cap ranges. You could slide the rules around. You basically play with it, trying to break it to see if it holds up. And this just doesn't quite feel like that type of strategy. If I look at the trading system, I can see that yes, in fact, they are using a market timing system where the benchmark or the S&P 500, if it's above the 200-day moving average, then they're going to use this momentum ranking system. Let's look at it. Okay, it's 12-month or 52-week momentum minus the most recent 4 weeks. That's pretty standard for building a momentum rank. So this one, I am not that interested in. Oh, okay. I'm going to have to do this again. And I'm going to show you what I should have done. What I should have done is when I found the system, I should have right-clicked and said open in a new tab, because it's going to reset this every time. Okay, let's scroll down here. This one looks interesting. Small Cap Value and Growth Sim Demo by Dan Parquet. He actually is a very sophisticated quant that works at Portfolio 123. He does a lot of programming. So already I like what I see here. It's been ran over the last 20 years. It has a very high annual return, a Sharpe ratio of 0.9. I mean, the drawdown's big. That's because it is small caps and micro caps. Let's have a closer look at this. Okay, interesting. And because it's a demo, I'm just guessing that whenever people sign in and they want a demo, they used to get at least, maybe not now, they have Andreas, but in the past they would have Dan Parquet doing the demo. So maybe this is one that he would show the features of Portfolio 123 with. Let's look at the trading system. Okay, so I've seen enough to know that I would like to test this further. So what's the plan now? You click on the gear wheel, save as new simulated strategy. It's going to put the strategy in my own account. Now it's going to want to save various components of it in my own account, which I'm going to need to do if I'm going to play around with it. So let's save it. Also, it uses this universe small caps demo, which is not authored by me. I will save it. And we're going to say $1 million. There's no commissions with my broker. 0.35% over the next close is what I generally find with the small caps, micro caps. In my trading, we're long. We don't want to use margin. Okay, we're going to turn this feature off. I won't bother explaining some of these things because it just is too lengthy. I want to rebalance or potentially trade every week, allow immediate buyback, and I want fewer positions than that, 15 stocks. So you could go in and look at the universe if you want. Later, we're going to have a quick look at this value and growth demo ranking system. But for now, let's just look at some of the various buy and sell rules. So it buys when the ranking system is above 98. It sells it when it's below 95. It looks like we have this rule that sells some of the position if it gets too big. I'm just going to turn that off, that profit-taking rule. And we have, what does this do? Stocks in the top 70 industries with the best 13-week return. Okay, so it looks at all industries. It compares their last 3-month return, and then it keeps the best 70 industries. So it's going to exclude low momentum industries. And then it has some sector and industry weight rules. I'm just going to turn that off. I'm not often a big fan of that. I'm looking for a focused strategy. I just want the best stocks. Okay, so let's just look at what kind of a strategy or what kind of returns we get now. I'm going to make sure it's on the most recent date and run. Okay, it's going to want to save it. That name is fine. All right, so the strategy still holds up even when I reduced it to 15 positions. The return looks nice. Let's look inside to see what else Dan built inside the system. Looks like there were some optional rules down here. So here's a rule where we can buy when the volume spikes. We can only buy small cap or micro cap if they rank high with quality. We have one that reduces the correlation between the stocks. We have, oh, I like this one. It's when the earnings estimate increases by at least 10%, and that's compared today to what it was 4 weeks ago. And it does that across next fiscal year earnings, current fiscal year earnings, or current quarter earnings. If any of those has a 10% spike, I like that rule. Let's turn that on and let's see what the impact is. So you're buying whenever estimates are turning up, it has price momentum, and it's ranked high as regards value and growth. Okay, so let's have a little look at the ranking system. Open in new tab. Let's have a little look. So it's 60% value, 30% growth, 10% supporting. What is that? Okay, this is interesting. It's saying that if there are any analysts covering the current fiscal year. It prefers fewer analysts. Now, I'm not a big fan of that. I mean, yes, I want smaller stocks, but I'm looking for upgrades and maybe they're not that meaningful if there's only one guy covering it. So what I'm going to do is I'm going to click at the top where it says value and growth. I'm going to go to weights and I can assign weights according to this. Now, what I want to do, if you just say 0, I'll show you. It'll just give a 25% weight to everything. So I'm going to go 1 and 1 for value and growth, which means that it's going to be 50-50 value and growth. Now let's go back to the strategy and let's just rerun that. Okay, it looks like we have something very promising to work with. Our annual turnover, 388%. So you can go through and you can look at the various statistics, some trading metrics, how long the average position is held, 83 days, 7.72. So there's a lot of things that you can look at here. But that's what I wanted to show you today. When you go into this little field on Portfolio 123, you've got thousands and thousands of ideas and strategies already built out for you. You just have to customize them and tweak them a little bit according to the way that you invest, and you will never again be burnt out and short of ideas.